Over the next decade, Asia-Pacific households will pass an estimated $6 trillion to the next generation. Yet the tools that truly compound capital remain gated behind ultra-high net worth thresholds.
We haven't seen anyone go after private banking, something that is human and services-based, and turn it into first a product that actually works for millions more with lower minimums, lower prices. We actually demoed a series of agents that acts like a product specialist that knows about the products, that knows about your account, then come up with a unique tailored portfolio for every single individual. And the tech and AI allows us to essentially segment these financial products into smaller pieces. That's ultimately the moat. It's not all AI. AI is only about 25-30%. It's the entire wealth platform, access to the products that puts it all together into one simple solution. The threshold should not be amount of money you have. The threshold should be amount of sophistication you have. Anyone can walk in and take a driver's test. If you pass the test, then you get a driver's license. I think it should be exactly similar.
Over the next decade, Asia-Pacific households will pass an estimated $6 trillion to the next generation. It's a seismic transfer of wealth that's already reshaping how wealth is stewarded and grown here in Asia. Yet the tools that truly compound capital, like direct access to private market deals, tax-smart wrappers, institutional-grade risk engines, remain gated behind minimums and relationship thresholds that only really the ultra-high net worth individuals can clear. Imagine opening up an app on your phone that quietly scans thousands of private equity offerings, aligns the ones that match your liquidity horizon, and bundles them with insurance and tax considerations before your morning coffee. That promise is no longer science fiction. It's the vision of former Google Pay architect Ceasar Sengupta, now co-founder and CEO of Arta Finance. Today on Rate of Flow, we ask, can AI really hand family office superpowers to millions of investors without the seven-figure entry ticket? Ceasar, thanks for joining us today. Looking back, you were at Google before. What's one investing mistake that you made after leaving Google that's shaped Arta's product roadmap going forward?
That's a great question. First of all, thank you so much for having me on this. And can I talk about an investing mistake I made before I left Google?
Certainly, anytime. We'd love to hear about any mistakes.
So I think the first thing was not getting started early enough with alternative assets and diversifying away from public markets. So I think if I had done that earlier, we'd have had a more diversified, more resilient portfolio. I was sort of very single stock. You'd find most tech people with their company stock and maybe a couple of others that they've bought. So I think one of the things that I should have done much earlier was start thinking about how to diversify, especially into other types of assets.
And that's really what Arta is trying to do, right? Is democratizing wealth management for the masses.
That's exactly it. In fact, a lot of Arta has been shaped by the experience that my co-founders and I had as we were rising up in the ranks of Google and starting to earn a little bit more and realizing that while we were really good at our careers, we were making a lot of money, there wasn't a lot of support for professionals like us. Right? We didn't quite have the high minimums that a private bank needed at that point. But at the same time, we had grown beyond our spreadsheets and doing stuff in our brokerages. We needed access to additional types of asset classes, more structured ways of doing things, just a better, more structured way of managing our finances.
Right. I mean, that transition from Google to finance is quite interesting. I mean, Google is part of the kind of move fast, break things mentality. And you brought a lot of your co-founders over from Google as well. How did your approach to creating the business, both from a technology perspective and a regulatory perspective and everything else, change as you move from that tech space to a more regulated space like finance?
So it was actually a much more gradual transition because at Google, I ran all payments and fintech. So payments is actually, in many ways, even more regulated than the wealth business. Mm-hmm. And Google obviously built all of its payment systems. So it was pretty regulated, run in a very structured way. So we had a lot of experience in how to deal with regulators, how to run systems. A lot of our experience was shaped in India, where we built Google Pay, which essentially, helped or played a role in transforming the country from cash to digital, right? And in a 5-year span, today you can't use cash in India. So that whole growth of Google Pay really got us into fintech. So it wasn't that much of a dramatic change. Obviously, Google being a tech company, and Google doesn't really quite play as fast and loose. It's quite serious because, so many of us live our lives in Google. But yes, wealth was a change. And I think we had to bring in a bunch of people from the wealth industry. So at Arta, after we started with the initial core group, we brought in people from private banks, from private equity firms, from wealth managers, across the gamut, so that we had that right mix of folks who knew tech, who knew how to build great user experiences, and who were experts at the financial industry. to be able to truly build a wealth manager or a private banking experience that's for this generation.
How do you feel that talent pool and those attitudes have impacted kind of the approach to risk on some of the products, the approach to developing the products? How has that kind of been an advantage or a disadvantage for Arta?
That's a great question. So I think I would say it's actually been a huge advantage. In fact, I think one of Arta's unique advantages is being able to combine the talents and the sort of the experiences of people coming from these different diverse backgrounds. So like, let me give you a tangible example. Alternative assets. The lady who leads that business for us, Tracy, used to run alternative asset selection at LGT, large European private bank, right? And so she's gotten not only her network and her experience, but a deep amount of expertise in how to find the right set of assets. So if you'll notice, we're not a marketplace. We don't throw 100 different private equity funds or private credit funds on the platform. It's very curated, 10 to 12 things that, investments that we believe in, have high conviction on. Similarly, in other places, in the US, we offer insurance as a tax strategy. And the lady who runs that, Sam Malik, she and I were business school classmates, and she's an expert in insurance. She's been in the insurance industry 20 years. And she had always thought of ways of taking these very powerful insurance strategies that work for taxes in the US and being able to offer those to people in their 30s for a much lower minimum. And so by bringing her and her expertise and her network in, and then combining the user experience and the technology from this group, really helped us create this offering, which takes these financial superpowers and then brings them to everyone.
And presumably, I mean, you guys have raised 90 plus million through your seed and Series A. Is that the gap that investors really saw and got excited about?
That's exactly it. I mean, if you look at it in a very simplistic way, there have been a lot of efforts at modernizing banks, either with banking platforms or with these neobanks. But literally in the private wealth space and the wealth management space, there weren't many efforts. You had a few robos here and there and a couple of other point products. But really, we haven't seen anyone go after, how do you change private banking? And especially in this era of AI, where AI is dramatically affecting pretty much every industry we have. How do you take something that has been so human and services-based and turn it into first a product and then something that actually works for millions more with lower minimums, lower prices? And that's ultimately, I believe, what our investors really got excited about.
Wealth management was always seen as kind of the last bastion of analog processes. And I worked in Citibank in Switzerland many years ago, and going down to the Geneva office was amazing because you walk into these marble floors and treatment was particularly amazing. Do you see, I mean, the narrative within wealth management has been like the younger generation don't care so much for the white glove treatment. They're more about getting things done and access. Do you see that as being a key cohort of your customer base, is these millennials? And what is it that private banks don't get about your customer base?
I think that's absolutely right. Our customer base is 30 to 45, right? Maybe late 40s. Average age would be late 30s, right? These are professionals. These are people in finance, tech, media, people who are creating wealth in their lifetimes, not just inheriting it, right? And it's not that the private banks don't get it. I think all the private banks want to target this audience, but without technology and without being able to personalize at scale, you just can't approach them. So interestingly, at Arta, we actually have two businesses. We have a B2C business, and then we have a B2B2C business. And the B2B2C business is where we take our entire platform and we offer it in partnership with the bank to their clients so that they can reach many more people. Because my belief is we want to reach these professionals across the world. In some places, some segments, we'll do it directly, but in many others, we will partner up with an existing bank and bring our technology and our AI to play, and they can bring some of their advisors, they can bring their expertise, their product selection, and then together we can actually serve millions more users.
Do you see technology as being your big moat in terms of your competitive differentiation? Is that because it seems, I mean, you're democratizing wealth management for the masses, great. Other people can do that as well. Of course, it takes time and money and all of this, but I mean, what do you see as Arta's big moat that will keep your competition away?
So I think tech and AI would probably be the furthest along. And the tech and AI allows us to take all of these financial products, these assets, and be able to essentially segment them into smaller pieces. Sorry, as you can see, tech is AI is all over, and AI starts up even when you don't want it to. But that's ultimately the moat that gets us beyond anyone else.
I mean, the AI, there was a study I was looking at that 74% of Asian high net worth individuals expect AI tools in wealth management, which is kind of way above the global of 60%. The AI is a key part of that. Where do you feel that Arta is on that journey in terms of leveraging AI to really provide? I mean, the ultimate idea is personalized digital wealth management, right? That I think you talked about robo-advisors before. That's always been one of the criticisms. People think, oh, there's a lot of AI behind robo-advisors. It's not really. There's a portfolio manager sitting in the back room with a bunch of puppets that kind of makes the show go. Where are you in the adoption of AI and that personalization that we're looking for within wealth management?
So we're early, but I think we're quite far along in terms of compared to the overall industry. And I'll give you a couple of different examples on this. So, before AI, as in generative AI, got sexy, we used to use a lot of machine learning. At that point, we just called it machine learning. We didn't call it AI. And the first instantiation of that is our public markets trading systems are completely automated. We don't have any portfolio managers sitting behind tweaking stuff, right? You can invest in these quant portfolios where you decide the risk level, you decide like which sectors you want to be overweight, underweight in, and the portfolio will get traded for you. So all this is has been used by many, many people, hundreds of millions of dollars in AUM, all of that. That's already scaling. But over the last year and a half with generative AI, now we've come to a very interesting pivotal point. Two things. One is it allows personalization at scale, which was just not possible before. And the second thing is it allows for a much more natural voice-based way to communicate with this system. So earlier in April, we actually demoed a series of agents which kind of help you along different parts of your wealth journey. So there's one that's a product specialist agent that acts like a product specialist at a wealth manager or any bank that knows about the products, that knows about your account. You can say, hey, how were my returns over the last week? And it'll give you an answer in regular plain English, right? You don't have to browse through lots of gobbledygook or apps or PDFs to understand that. We also announced AI investment planner. So this one talks to you, understands your needs, understands your risk, understands things like what time horizon, do you have kids going to college in 5 years? You'll need liquidity at that point, things like that. And then taking all of that into play uses our proprietary, another type of AI called convex optimization system to then come up with a unique tailored portfolio for every single individual. So, and then there are other pieces of AI that we've already rolled out in various forms, but a set of these are starting to ship now. So some of these are already available to our users over the next few weeks. Some of these agents will start lighting up across US and Singapore. We have one of our partners that's taken these AI experiences and is about to ship them in their country. So this is starting to happen, but I think we're still scratching the surface. I mean, the way the models are improving, the core underlying models are improving, we have so much more to do here and see here that I think over the next 6 months, year, 2 years, it'll be really exciting. I think we are actually alive at one of the most exciting times in history. This is where pretty much everything we see is going to get affected by AI and change over the next 5-10 years.
Everything we see, everything we do, everything that, we work at. I mean, that said, though, there is a lot of hype around AI. When you look at AI within the wealth management space, what do you see as the biggest hype right now that you don't think will really come to fruition? I mean, I think about some of the prognosticators within our space, and they say, well, it's just wealth is going to be automatic. So your paycheck comes in and then it's automatically. Are we going to get there? Is that something that you think is a little bit beyond the pale?
So, when I was at Google, one of the founders, Larry Page, used to say, we always overestimate change in the short run and underestimate change in the long run.
Is that him or Bill Gates?
I don't know.
Maybe they both said, yes.
Larry's the one who used to keep telling us this.
Okay.
Right? And so I haven't done research on whether he picked it up for someone. He never claimed that it was just his. He just kept saying this. And so I'm attributing it to him. But fundamentally, I think if you look at is AI being overhyped and sold, it's a question of timeline. If you take a long run view, the scale at which the models are improving, you will see dramatic changes. However, it's not all AI. A lot of it is in Arta, we spent the first few years just building out access. How do you take private equity, which typically required minimums of $500,000 and make it available for $10,000? That's not an AI problem. It's a systems problem, right? It's a legal problem. It's a partnership problem. It's a technology problem. So I think to do something where your paycheck goes in and automatically gets invested in the right way, AI is only about 25-30% of it. The remaining part of it is all of these other systems that have to be brought together. And that's where the value of Arta comes in, right? Because it's not just an AI service, it's the entire wealth platform, access to the products that puts it all together into one simple solution.
Walk us through that. I mean, let's talk about the products for a minute. You have these, obviously, the private equity products that will have millions of dollars in minimums. How does that work? How does Arta screen for these products? And then how do you bring it into the ecosystem and offer it to your clients?
Yeah, it's a great question. So on the, for each asset class, we have a different approach. So for, let's say, private equity and private credit, we have a team that goes and meets 100, 200 different managers around the world every year, right? And they'll look at like the funds, the performance, all of this. Then some subset of those managers we take into a formal due diligence process, right? That's where, this is nothing new. Arta, we haven't invented it. This is what every private bank, every wealth manager does, or at least should be doing. And so then we look at look at all the past performance, look at the funds, where have they invested, the leadership teams. We have multiple rounds of conversation with them. And then all of this thing goes to our investment committee, right? And the investment committee will look at it and say, okay, we feel comfortable putting this onto the platform. At that point, we start working with the manager, with technologies firms, others, to figure out how to take like a bigger allocation on behalf of Arta or our users. And then we chunk it up for our users, right? So that's how we let a client invest $20,000 that then goes into another bigger pool that goes and puts, say, a few $1 million into a private equity, right?
Do you face challenges with that? Because I would think, like for the private equity funds, they would rather take a chunk of $5 million from one person than give it to a company that's going to take that $5 million and spread across multiple. Or is that just
That's actually interesting because that's been one of the biggest changes over the last few years. So if you look at most of the private equity funds, and especially the ones that are particularly forward-thinking, you're seeing them trying to go broader in retail. And a couple of reasons for that. If you think traditionally, private equity funds initially started with sovereign wealth funds, institutions, and maybe some large family offices. Then over the last 10 years, they figured out that private banking and ultra high net worth are a big segment of growth, right? Over the last few years, what's happened is they've realized they need to diversify their base even more. And most of the growth is actually going to come from these affluent professionals, because these are people who are starting to invest in their 30s, they're aware of it, they want to invest across multiple funds. So now there's a whole bunch of private equity funds that are actually trying to form direct relationships, trying to expand into that. If you look at the pure numbers, in a private bank, typically about single-digit percentage of customers or clients would have invested in alternative assets. So the penetration of alternative assets into this high net worth segment is very small. This segment is the segment that's actually growing compared to most other segments of the wealth industry. You look at family offices, high net worth. The high net worth segment is the fastest growing segment overall, and the penetration there is really low. At Arta, nearly 50%, or slightly over 50% of our clients have invested in alternative assets. So you can start seeing that what will the future be? When you have an average age on Arta of 38 and a typical private bank has an average age of 60, right, of a client, you can kind of see where the future is going to be. So a lot of the private equity firms, private credit firms are actually wanting to work with us to form a direct relationship with their clients and just be able to cater to them over a course of the next 2 or 3 or 4 decades, because that's where growth is going to come from.
Yeah, as they continue to go on their journey. Talking about your client base, if I have the numbers right, when you did your beta launch, you had about 100 million in AUM, even before the public launch. What did those initial users teach you?
Yeah.
What did you learn from
that?
That
was a while back.
Yes.
We're significantly beyond that point at this point. I think the initial beta users, to be honest, for us, were just trying to help us validate, did we have a proposition? Did we have access? At that point, and even for the first year of our journey, I would argue even critically, even now, like actually what we solve really well for is access, right? And the reason you need to solve first for that is, if you want to create a tasting menu, first you need to have all the different dishes ready, right? So that's what Arta does very well. We have all the different asset classes. Someone who's fairly savvy can come in, decide what they look at. Then we see what, after a while, people are like, okay, this is good. I've invested in a couple of private equity, maybe some private credit, some structured products, some public market strategies. Then they'll sit down with us and say, hey, can you now help me across a larger portion of my wealth? So historically, we've had a team of wealth managers who then get involved, right? And then they'll sit down with you, understand, create a portfolio. So we have a number of clients who've gone through that journey. Now we're managing, majority or significant portion of their wealth because they've felt the trust and they've moved all of it over. Now the next stage for us is to bring in something like the AI investment planner, because then people can start on that journey much earlier. They can say, hey, I just got a bonus, and I want to move this money in, but help me deploy it, but not necessarily sure I want to sit down with the wealth manager and talk it through. Of course they can, but now they can just do it on their own while driving around, sitting at home, and be able to create a unique portfolio for that. So that's the path and the journey we've been on.
And the challenge with that, I think we've kind of seen that with some of the other robo-advisors here in Asia, is that they've gone mass market, but then they see as the opportunity is going a little bit more higher end, so high net worth individuals, and then bringing in teams to support them. But then they become almost like traditional asset managers.
And you can't scale.
Yeah. So how do you deal with that at Arta? I mean, you're just hoping that, or not hoping, but planning that AI will be able to handle that for you.
That's what we've been building towards. So basically, if you look at it, after we did the first few hundred investment plans that our investment team did, and we're a very small investment team, like wealth managers, who create these plans. We took all of that experience and turned this into an AI system. So it's not built out of theory. It's based on the first few hundred plans that were done. Even now, someone can actually go through this, brainstorm a lot, think about how they want to create their investment plan, and then sit down with our investment planner. Right? So it just creates a much more scalable system. Now, it remains to be seen how many people do this completely independently and don't want to talk to anyone. How many people actually say, hey, I'm going to use this as a way to brainstorm and understand, and then sit down with the wealth planner, and that'll tell us what our scaling numbers are going to be. But so far, it looks pretty positive from the early tests. Like, people are willing to actually use this, understand, and there's a different dynamic to interacting with an AI versus a human. It's kind of funny how we human beings think, like, you're almost much more open with your AI rather than with another human, because you're not being judged. You don't feel like you're going to be looking stupid to someone. You also feel like your information is a little bit more controlled rather than just handing it over. So again, we'll have to see, but over the next 6 to 9 months, I think these behavioral aspects are going to be very interesting. But we're already starting to see like the people can actually talk for a long time. And it's actually really fun to have a conversation. Like, I wouldn't have thought like talking to a wealth manager is fun, but we've seen this with ChatGPT, Gemini. Conversational AI is really, really interesting.
Yeah, I think that probably the last time that I had a human broker was about 20 years ago, and I despised those conversations. So maybe it's improved since then. What about comfort with the platform? I mean, obviously, I think back to the first time I bought something on Amazon, which again, would be 20, 25 years ago as well. But that first time that I'm using a credit card online was a big jump for me. Do you see, I guess, just naturally with the people that are coming onto the platform, if they're a bit younger, a little bit more digital savvy, they're a little bit more open to putting their wealth onto what's a digital platform? I can't go to my DBS wealth management office here in Singapore. I can go to an app. Yeah. The comfort level around that.
So a couple of things. I think the comfort level is definitely much easier the younger you are and the better it is. But we've also done a lot to increase the comfort level. So a couple of things. First of all, being regulated helps, right? You're SEC regulated in the US. We are MS regulated here. The second piece is we have a very well set up member success team. So any of our members can reach a human being, talk to them, have a video conversation, or email, sometimes even meet them. Like in Singapore, we've actually found people willing to come into our office, like just to meet the member success team. So that's helped making sure that there's always someone you can reach, right? Third is the way we've set up our system. So every Arta member gets their own account at BNY Mellon, right? At BNY Pushing. And that's a custodian, one of the world's largest custodians, very reliable, probably the oldest bank in the world, right? And we deliberately did that so that people could feel, even if, Arta, something happened to Arta disappeared, your money is all safe at BNY, right? So these were structurally things that we did to try to raise the comfort level. Finally, the last thing in wealth, like you'll realize, even when you're working with a private bank that's been around for 50 to 100 years, people won't move all their wealth in one go, right? So it takes time. And we see that progression happen. People will usually start with a smaller pool of money. They test it out for 2 or 3 months and see, okay, this is decent. I'm getting the right kind of responses, the right kind of returns and things like that. And then increase their wealth. So we see a very steady, 3 to 5x increase in wealth over the course of the year from the same set of users.
People more
putting in
share of
more.
wallet.
And that's also another mark you get to is when people go from like, okay, you've been helping me with a few investments to like, okay, now I'm ready to move a significant portion of my wealth over to Arta.
Just going back for a second to the regulation side of things. I mean, with SEC and the MAS, two of the probably more toughest regulators
Yes.
Globally. Was there anything that surprised you about the compliance costs or, coming into this space? I mean, you mentioned before you worked for Google Pay, so obviously payments has a huge amount of regulatory burden around it as well. But was there anything that surprised you on the wealth management side of things?
Sid, that's a great question. We probably stuffed up on the legal and compliance side pretty early, just because a bunch of us are old folks and we've had scars and wounds from, not being well prepared on that side. But I would still say, at least in a couple of places, I was actually surprised by how much engagement regulators have with you.
Positively.
Positive, negative, examining, checking,
Okay.
all of that kind of stuff, right? A significant amount of time and effort in the company goes towards engaging with the regulators. Very fair, and I think good and necessary. As a consumer, it kind of makes me feel good and happy that, regulators, both in SEC and MAS, are actually quite active. And so that used to be slightly different in the payment space, where you would have periodic checks, but not as much like ad hoc. Hey, this happened in the industry. What are you guys doing about it? That kind of stuff. So that's both on a positive side, but that definitely has been if not a surprise, a change from what we had planned for initially.
Is there something that the regulators need to focus on now within the wealth management space to solve for in terms of regulation, either here in Singapore or in the US?
I think I would say two
right
things, two big things. One is Singapore is already focused on this, which is AI. AI is going to come into wealth in a big way. And AI has the potential to expand access very dramatically, but not just expand access, but be able to provide the service in a very consistent and better way. Like today, with an AI system, you can actually, if the AI system does something wrong, you can train it the next time around to never do it wrong again, right? And so I think being able to deploy AI at scale is going to be transformative for the industry. The second thing is access to asset classes. There was a recent paper, I think, or not a paper, a request for information that MAS issued about should retail users have access to alternative assets and how should they have it? And these are great questions, right? Because again, if you think about it, today there's more companies in terms of valuation that are private than public, right? So you can already see if you're only invested in public markets, you're actually not diversified in terms of value creation in the world, right? So being able to have these not just be available to the high net worth, the accredited investors, which it is today, but be able to form the right regulation so that they can be open to everyone, I think both are very, very interesting things for regulators to think about.
Of course, the other element of that we haven't talked about is crypto. And obviously the US government has been looking at crypto a lot recently. What do you see that changing the nature of the products that Arta will be offering in the future? Is it something that should be on the side? How do you feel that fits into Arta's product roadmap and then, I guess, digital wealth management in general?
That's a great question. I think crypto, obviously the acceptance has increased massively, and with the regulations that have just happened in the US, it's probably going to shoot up, right? So till now we had avoided it largely because as a regulated company, crypto was a bit more of a complication. Now we're thinking back and looking at like, how do you incorporate that into the overall picture of wealth? Because more and more people are going to put money into crypto.
Yeah, a friend of mine living in Sentosa, which if you're not from Singapore, you'll know that is a high wealth center. He has a Ethereum and Bitcoin ticker above his fireplace. Why you need a fireplace in Singapore remains to be seen. But I'd like to go into a section now before we get into the future of kind of lightning questions of myth versus reality. And I'm going to give you a couple of statements, and I just want to hear you say, agree, disagree, and why on this. AI robo-advisors will replace human RMs within the next decade.
For some people.
Tell me why.
So I think it really depends on two things. One is, I think there's a set of people who are comfortable with technology and generally being much more self-driven. It isn't so much a factor of age. I think it's much more a factor of like, whether are you self-driven or not. And for those people, this will be a huge enabler. It'll really help them scale. But our experience has shown that there are a bunch of people who still want to sit down with a human being. Maybe if not in the financial planning side, just as financial therapy, as a therapist, right? Markets are going up and down. Like you just need someone to like tell you it's going to be okay. So I think there's a role for both. I actually think what's going to happen more is that the human advisors, the smarter ones, will be able to leverage AI to cater to many, many more people. Because if you look at the private banking industry, and as I told you, we have a B2B2C business, so we work with a number of global banks, private banks, the amount of time really amazing wealth managers waste on really operational stuff that doesn't add value is enormous. And so if you can scale the current wealth managers, today a wealth manager can handle maybe 50, 60 people. They could easily handle like a couple of hundred. So I think there's a role for both. And it'll be the case for, it's not just wealth management, it'll be the case for any profession you take. AI is going to replace some, but there'll always be some people who are able to use AI to scale more.
Tokenization will outpace ETFs in alternative access in the future.
In alternative access for?
Alternative financial products.
That I don't know. We'll see.
Fair enough. Family office privileges or access to wealth management, I guess, for high net worth individuals or these kind of alternative access will cost less than 50 bips by 2030.
Without a doubt. 100%.
Driven by AI.
Driven by AI.
As we come to the close, I want to obviously look forward to the future now. When we think about wealth management for an Arta user, what does the 2030 Arta dashboard, when somebody opens up the app in 2030, what's it going to look like?
I think it's just going to be a button you click and you start talking to it. And then as you talk to your manager, your AI wealth manager, your agent, you can choose the personality you want, you can choose the name you want, you can have it reflect your own voice, your dad's voice, your mom's voice, whatever you want. It'll be able to tell you how you're doing, what you need to do. It'll show you the numbers, the graphs. And I don't think we need to wait till 2030 for it. It's coming soon.
I don't think I need my dad telling me any more about financial management. I think I had that enough.
Maybe your children, now they're growing up older.
Yes. We talked a little bit about the team that you've assembled. What strategic doors does that open for Arta going forward? And obviously the professionalism of them for structuring products and picking the products is very important. Where do you see that going in the future? What strategic advantages is that highly experienced team going to be able to give Arta in the future?
I think a couple of things. I think we have a massive potential for helping the overall ecosystem adapt. So, of course, we are building a wealth platform ourselves, but the reason we're building the wealth platform is to be able to provide sort of this wealth engine for a very large number of partners in the ecosystem. And I think having folks in the team who have this deep expertise in different domains combined together with technology and AI means we can actually sit down with our partners, some of the biggest banks in the world, digital banks in the world, and help them really be able to scale and transform themselves for the future.
In the work to democratize access to a lot of these alternative investments, will we get to the point where everybody has access to all of the different products and services, or should some of these still be limited to a certain threshold? Because we have a lot of discussions, obviously, in the US around accreditation, around investors. Here in Singapore, they've talked about, should people be able to trade crypto? I mean, it seems in my mind that there should still be some kind of threshold that's there, whether it's a driver's license for investing or something like that, so you understand what you're getting into. Yeah. Is there the risk that we democratize access to these products too much?
So, look, this is a big debate that the regulators around the world are having. But I would say there are two things to parse out in this. One is, you mentioned driver's license. There's an identity aspect to it. I think identity is very important. We should definitely have identity. So let's put that aside for a second. I think, should there be a threshold? Yes, but the threshold should not be amount of money you have. The threshold should be amount of sophistication you have and how much of an expert you are. So there's no reason why you can't be 22 years old and have enough knowledge of alternative assets or structured products or crypto to be able to do it. On the other hand, I would argue that somebody with $1 million sometimes and much older in life who doesn't understand these products probably should be required to understand it before they go and understand it. So should there be a threshold? Yes, but the threshold of wealth was an approximation and a simplification made 50 years, 100 years back, which is not true today in the world of AI, internet, and YouTube, right? So it should really be about, are you capable of making these decisions? Like, we don't sit down and say, hey, you need so much money before you get allowed to drive. Anyone can walk in and take a driver's test. And then if you pass the driving test, then you get a driver's license. I think it should be exactly similar.
It makes a lot of sense. We like to give listeners a bit of homework. So when they, assuming they're listening to this in the afternoon or evening at some point, when they go into the office the first thing tomorrow, financial professionals, what should they be doing? What should they be thinking about with everything that's coming in this digitization of wealth management and the...
I think, first of all, they should start using AI tools. Like, it doesn't matter how, in their personal life, whatever, because it's a change in thinking. Even for people who've been in tech for a very long time, it's a completely different way to think. And I think this is where, your kids and my kids will have a huge advantage, because they're not encumbered by the way we've grown up thinking. So first step is, these folks need to start using tools. Like, just doesn't matter what you use. Gemini, ChatGPT, Cloud, just start using them, right? The second is to think about, like, what parts of your job could this thing do better? And then approach it not from a point of insecurity, but to say, if I can offload this part of my job to this AI agent, I'm going to be able to focus in and do this much better. And it makes me much more scalable and more productive. I think those two conversations will really lead to them being much better prepared for the world that is coming. That
question about kids is something that personally fascinates me as well. I'd like to ask you, what guidance are you giving your kids? Because 5 years ago, it was program, learn how to program and that'll get you out of it. What are you, when we look 5-10 years, I know you have your eldest is going into school soon,
college soon.
College, university. What advice are you giving them about how to tackle what's coming? Because programming probably isn't the answer, isn't the thing to study at the moment.
So, with this generation, it's not advice that you can give them, because they're not going to take the advice. But what we've done is given them access. So as soon as ChatGPT came out and had a paid tier, I got that for my daughter. And I was like, start using it. Yes, you will make mistakes. It'll sometimes go into rabbit holes. You'll get scolded for it. But it's a tool that is going to transform how your life happens, and you need to get used to it. Recently, I've been trying to get my son, who's much younger, just talking to Gemini and ChatGPT. And right now he just talks about fishing and cars. That's okay. But the fact that he gets this programming in his head, that there's a tool where he can use it as a thing that he can bounce off ideas, to think about, like it's an assistant that's with him, that is very, very powerful. And I think for my kids, at least, like, I'm trying to make them understand that there is this incredibly powerful thing. Look, for most of us growing up, internet was that. And then it became the mobile phone. And now your AI agents are like 10x better than that. So being able to navigate that world with its advantages and disadvantages is, I think, the best way I can prepare them for what's coming.
Yeah. It's a great note to end on. Thanks so much for coming on Rate of Flow today, Ceasar. It was great to have you.
Zennon, thanks so much for having me on. Pleasure talking to you.